I am extremely intrigued by StoneCo, or Stone Stock. STNE is the ticker. It's a dirt cheap Brazilian fintech company down over 80% from its recent highs, and it does have investment support from investors that have a growth innovation orientation, so a growth focus, as well as the deep value investors like Berkshire Hathaway's Warren Buffett. Both of these investors own a stake in StoneCo. So is this potentially deep value? I look at the valuation just on a high level. With the stock down so much, it's now trading at a very low single digit multiple of price to sales. And this is extremely interesting to me because when you look at, let's say, US companies that are growing at slower rates, have worse profit profiles, they oftentimes trade at multiples to where StoneCo trades at. So this is very intriguing setup. There are some reasons though why it does trade at a discount. We'll talk about that in this video. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no hype, mission focused channel trying to find you exceptional companies and unrivaled investments. So let's dive more into understanding StoneCo, its valuation, its most recent results, and my thoughts from here. Let's dive right in. If you enjoy videos like this, I do appreciate you hitting that thumbs up, hit that subscribe button. So looking at StoneCo, thinking about their business, it's really two different key segments. You have financial services and you have software. And you can see about 80% of their business is in this financial services part, which is providing effectively payment solutions for micro, small, and medium-sized businesses, to effectively enabling merchants to take on business, to be able to use credit card, and then saying, hey, there's a whole bunch of additional services that we could offer these merchants, like digital banking, credit solutions, insurance, so all these different credit card products. So this is all critical in getting a cut of the transaction volume that they've enabled from these merchants. They also have a software segment that they've been growing partly through acquisition. They had a major acquisition in the last couple of years, and so this software is really focused on saying, hey, not only are we providing the payment solutions for merchants, but what about all the software needs for these small merchants? Yeah, we think we could, deliver that as well. And so looking at how they've performed, I mean, they're just posting amazing growth rates. Keep in mind, all these figures are in Brazilian real, but looking at financial services up over 107% revenue growth. You see the total payment volume up 60%. You see the number of active clients that they effectively got over 100% growth. I mean, these all suggest that they have a very, very strong value proposition. They are winning in the marketplace. And then you look at their software segment, once again, seeing strong growth, even adjusting for their acquisition, still growth of about 27%, strong customer retention rates, and little by little, their profit margins are improving in this sector. Partly they're, investing in customer support, but overall, I'm looking at this saying, wow, this is some incredible growth rates, and the data suggests that they have a very strong value proposition. And that's what I'm looking for here on this investment channel called Unrivaled Investing, is that I'm trying to find these unrivaled companies, because stock prices go way higher, way lower, and you're going to have economic boom and busts. But if you find a company that's unrivaled or has a very, very strong value proposition, that means, in my opinion, unless the business, let's say has too much financial debt or it's taken business risks that can blow it up, if you make sure you judge the company for that, but and sort of size those up. But if you find these unrivaled companies or companies that have very strong value propositions, by and large, they just keep marching year and year. And so they will, take share when it's bad times, they'll take share when it's good times. And so I want to align myself with those types of companies, especially when I see them down nearly 90% in such short order. And so I like seeing what's going on with StoneCo. And it's interesting, they also called out how they effectively raised prices recently. Their take rate has gone from around 1.87% last year to around 2% this year. So this is effectively the amount that they're charging, that the amount that they collect, every time you're having that payment processing that's going through for these micro and small merchants. So effectively they're saying, yeah, we were able to pass on slight price increases. Another example of the fact that they have a very strong value proposition. Normally, when you're talking about price increases, most companies, they aren't able to do it like that. Or they're saying, hey, we had to react to higher input costs. Here it is. They're saying, yeah, we're growing real fast and we had a higher take rate. Those are data points that I like to see, suggesting a very strong position, competitive position that they're in. And also broadly, they're continuing to grow very quickly. And one of their historic problem childs is their credit portfolio. So it is good to see in their most recent quarterly update that they've largely worked through most of their portfolio, and that the legacy credit business was cash flow positive in the quarter. So overall, it's heading in the right direction. Previously, this was a major concern that, hey, is this segment of their business going to potentially blow up the entirety of their business as they effectively enable a bunch of bad credit? And you saw some of that happen, in the last couple of quarters. And you might say, well, wait a second, Daniel, if I look at their actual income, it seems like they've really swung to this huge loss position, this huge loss a couple of quarters ago, and I've talked about that in prior videos, but it's just still negative. What's going on here? Is this actually a solid company? Is this just a garbage stock? The reality is that when you look at their income, you need to factor in some very huge swings. They call it mark to market and cost of funds related to the investment in Banco Inter. What is that? What's going on? So what you should understand is that Banco Inter in Brazil is a very fast growing, effectively new bank, a digital bank in Brazil, and they wanted to partner with them. They did so by issuing around $500 million of bonds with a very reasonable 4%, a little under 4% yield. They used the vast majority of those proceeds to invest in Banco Inter, but Banco Inter stock is down significantly over time. And so what you're seeing with that, sort of that huge loss that they're reporting on their income statement, they're saying, yeah, we have this stake in Banco Inter. It was historically around a 5% stake. They've now reported they've sold off about 20% of that. What they're saying is that stake has declined in market value by about 80%. And so that mark-to-market decline is what they're reporting on their income statement. Now, you got to give, when there's a problem, you got to call it out. When there's credit, give credit where it's due. I'm looking at this and saying, hey, you raised US dollars to invest in a Brazilian bank, which is now down significantly. That does not bode well for capital allocation, and it also elevates the risk profile of the business. So there is part of the reason why StoneCo is in sort of the doghouse. It's sort of in the penalty box because, let's say you have radical, Brazilian financial policy in the coming months. You have elections expected later this year, and you have just crazy amounts of inflation that happens with Brazil. Well, now the business is arguably at greater risk because you issued those bonds in US dollars. So that is part of the reason the risk profile was elevated, and arguably they made a bad bet looking at it and how much they've lost so far on it. So making a levered bad bet is even worse. So that is part of the reason why the stock is in the doghouse. Now the question is, what's the right value for Stone? Where is StoneCo going to go? STNE is the stock. First, a quick plug, where if you're looking to take charge of your investment journey, consider unrivaledinvesting.com, where you'll get actionable insights on unrivaled companies. We also have a community of fellow investors that you can learn and share with. I also share my own personal journey for those interested in following along. A big thank you to all the Unrivaled Investing subscribers that keep this channel possible. Without the Unrivaled Investing subscribers, this channel wouldn't exist, flat up. And so if Unrivaled Investing is out of your price point, I do try to keep the price very affordable, but if it is, I do appreciate you hitting that thumbs up and hit that subscribe button. So let's keep going. First, the disclosure, which you can read on your own time. So looking at what's going on and thinking about StoneCo, well, first you need to understand that Brazil has very different risks than, let's say, you might find in other major countries. Every country has different risks. China has different risks. US has different risks. But here it is. You have a major national election later this year, 2022, in Brazil, and dramatic political polarization, and how that election turns out could have dramatic impact on future inflation and future stability in Brazil. So that is really important. Are they going to follow market policies, or is it going to be government driven, saying, hey, let's focus on strengthening state-owned enterprises versus privatizing them? So these policies do have impacts on businesses like StoneCo. Another key aspect is that there's been some very meaningful management turnover. This includes the co-founder of StoneCo leaving to start a new comparable company in Europe called SaltPay. I really don't like seeing data points like this. That said, management has also issued a new stock-based compensation plan that is also extremely interesting. I plan on discussing this and more about StoneCo in my next Unrivaled Investing letter. And so looking at a hypothetical valuation framework for StoneCo, I think that the upside downside from here, if they're able to execute, if there isn't some sort of macro blow up, is potentially very, very attractive, potentially hundreds of percent upside, maybe over 300% upside for StoneCo. And I'm making a couple of assumptions here. I'm assuming optimized profit margins of 20 to 25%, tax rate of around 26%, and assuming growth rate in the years ahead of between 20 and 30%. Arguably their growth rate now is much faster than that, but still, let's trying to be conservative given that who knows how the macro environment plays out in Brazil. And also given these uncertainties, I'm assuming lower end multiples, let's say 12.5 times earnings to 17.5 times earnings. And so still assuming fairly conservative, assumptions, I am penciling out something that's like 100% upside to over 300% upside. So I do like the setup here. I find it extremely intriguing, and that's why I want to dig in more, and we'll discuss further in my Unrivaled Investing letter when it next comes out. And so I like the setup. As I mentioned at the beginning, there are a lot of US companies that have slower growth, worse profit profiles trading at multiples of where StoneCo is. Now, they do have the rule of law and the sense of stability that you get with the US that arguably you don't have as much with a company based in Brazil or focus, with their operations in Brazil. So that is a key aspect for investors to consider. But, at what trade-off do you say, hey, the risk reward and the price is so much cheaper? It's literally, multiples higher to pay for a US stock versus something like this where it's like 2 to 3 times sales. That is extremely interesting. And that's why I want to dive more into figuring out, should StoneCo be part of my investment journey if you don't have a macro blow up, which is very possible. I mean, look at the history rate of the Brazilian real versus, let's say, the US dollar. I mean, they treat, historically, the leadership in Brazil is treated, their currency like toilet paper. I mean, you see just massive amounts being printed over time. And not surprisingly, if you're a global investor, you might say, well, wait a second, the stock might do really well, but the currency is going to fall apart. So that is the challenge that a lot of investors face. And so that's a broader macro. So if they're able to execute, and if there isn't a macro shock, I do suspect that there's just tremendous upside potential for a company like StoneCo. So these are the different data points that I am considering. If you enjoyed this video, once again, I do appreciate you hitting that thumbs up, hit that subscribe button, and a big thank you to all the Unrivaled Investing subscribers that make this possible.